So many would have hoped the ceasefire would have held. It hasn't. So in regards to energy prices, what is the impact and what is going on? And what impact has this had on UK energy prices? The situation in Iran, of course, impacts flows of LNG, but what have we been seeing? And how has this all been impacting European gas storage? It's not sounding very positive. Are there any silver linings? And the weather, what impact has this been having on UK energy prices? Are there any trends over the past 6 months that could help businesses with their energy purchasing decisions? And what should businesses keep an eye on throughout August?
In August, the main driver is likely to be.
So hi Emma, thank you for joining me today to break down the latest shifts that are driving the energy market. I think there's only one topic we can start on that's been dominating the entirety of 2026, and that of course is geopolitics. So as of last month, there had been some ease in tensions between the US and Iran, and the hope was that the markets would reflect that. However, that doesn't seem to have been the case. Please, can you explain why?
Yeah, of course. So as you say, last month we saw the Memorandum of Understanding signed between the US and Iran, and that led to the reopening of the Strait of Hormuz and the renewal of oil flows through the waterway. But this month we've seen a bit of a breakdown of that agreement, and we've seen renewed strikes between the US and Iran, and that went on for about 2 weeks, so about 13 consecutive nights during the middle of July, and we saw prices increase by just over 30% on the front month power contract, and they peaked on the 22nd of July to the highest price for that contract that we've seen since the start of the conflict. That being said, we have seen a halt in strikes over the weekend just gone, and as a result we have seen prices fall about 4% on the day that they opened after that.
So some significant volatility once more. Again, it seems to be the playbook for 2026 when it comes to geopolitics. Looking ahead to August though, are we hoping to see an ease in tensions and potentially some hopeism in the market?
Yeah, so that would certainly be one possibility, as a continuation of the easing of tensions between the two. So we've seen a pause in strikes over the weekend. The hopes is that the mediators are going to be able to negotiate a return to the Memorandum of Understanding, that temporary ceasefire, which would hopefully then lead to longer lasting peace, and we would see some downward movement in prices as a result of that. However, there's other possibilities as well, so we could see further escalation. Last week there were mentions from both the US and Iran of targeting power infrastructure and energy infrastructure across the region. So if we saw that happen, then we would expect prices to move up further. And equally, if we start to see a move towards boots on the ground and US troops going into Iran, then again, we would expect to see prices move up again off the back of that.
So to summarise, some temporary relief in tensions, but as always, there's going to be some uncertainty. So the fallout, obviously, of the conflict that's happening extends, beyond the Middle East. And when it comes to global gas markets, what impact are you seeing in regards to gas flows and LNG more specifically through the Strait of Hormuz?
Yeah, so we did actually see the LNG exports out of Qatar reach the highest level that they've been since the conflict started, mid-July. But with the renewal of strikes, as I say, a couple of weeks ago, we actually saw flows fall back close to zero. So essentially no LNG now coming out of Qatar and out of the region.
So nothing coming out of Qatar, but in regards to other regions throughout the world, Australia, for example, what's happening there?
Yeah, so I know last month we mentioned that there'd been some strike action in Australia that had impacted the exports coming out of there. We've not seen anything like that this month, but there has been an outage at the Freeport facility in the US, which led to a drop in the feed gas going into that facility to be liquefied. But that resumed within a couple of days, so no major disruption. But of course, with the loss of Qatar supply from the market, any further disruption adds further support to prices.
I guess circling back to what matters most to us as UK residents and UK consumers is UK power prices. So we've spoken about it before, how events far and wide can impact that. Could you go into a bit more detail as to why, zero supplies from Qatar, impacts that are happening to America's LNG, how that could impact UK power prices?
So LNG is traded on a global market. So even though Europe don't necessarily usually import too much LNG from Qatar, the loss of Qatari LNG from the market means that we're having to compete for sources of LNG that we wouldn't necessarily usually have to. So Asia have been importing more LNG from the US, for example, than they usually would. It means we're having to compete for the smaller amount of LNG that's available on the global market, which means that our prices rise as well.
And would you say this is a short-term impactor or something that the market should be keeping an eye on for a longer period?
I think it's something we need to be keeping an eye on for a much longer period. So of course, the conflict that's ongoing at the moment is going to have a significant impact on our prices, no matter how long that goes on for. But even outside of this conflict. We were speaking last year about the fact that we were expecting a significant growth in the amount of LNG that's to be available on the global market over the next few years. Some of that was expected from Qatar, which has now been delayed, but some of that also expected from markets such as the US. So we need to keep an eye on LNG markets, make sure we are seeing that increase of LNG that's available on the global market, because it provides us with a flexible supply of gas. If we need it, we can import more LNG if we get that rise in demand.
So against the backdrop of all these events that are happening globally, let's turn our attention to something we've discussed in Environment, which of course is European gas storage levels. With the supply concerns happening, what's the latest, sentiment in regards to Europe and their storage levels?
Yeah, so European gas storage facilities are currently just over 55% full. It's about 10% below where we were this time last year. And the target, as we've spoken about previously, or the obligatory target for European member states to reach by the 1st of December is 90%. There is leeway or flexibility within that target, so it can be reduced by 10% to 80% in difficult market conditions, and there is a mechanism for it to be reduced even further in particular difficult conditions. But forecasts at the moment suggesting that by the end of the season, storage facilities may be between 70 and 75% full, so likely to fall short of that 80% target.
So from a geopolitics standpoint, it's all escalating again. Storage levels are 10% behind their phase and looking to fall short of the yearly target. We're discussing quite a lot of challenges, so let's turn that around. Are there any positives we could be turning our attention to in regards to energy markets?
Yeah, so it's not certain at all, but the current El Niño weather that we're having can lead to sort of milder, windier, wetter conditions through the winter months. It's not a direct correlation, so it's not necessarily guaranteed, as I say, but generally speaking, it's the weather conditions you would expect. So there's milder conditions, potentially less demand for heating, and if we get those windier and wetter conditions, then again, potentially more renewable generation, meaning we're relying a little bit less on the gas that we have in storage to meet the demand that we do have for heating.
So we haven't spoken about El Niño in a while, so please could you provide a bit more context as to what it is?
Yeah, it's essentially a sort of climate condition where we see the unusual warming of sea surface temperatures in the central and eastern Pacific Ocean, and that can impact weather patterns all over the world, really.
So weather patterns could actually help to ease some of the pressures later on in the year. And on that note, what a segue into one of our favourite topics, which of course is the weather. And weather has been another major driver this month, with the temperatures that we've seen across Europe reaching record high levels. What impact has that had directly on pricing?
That's exactly right. So the rising temperatures can impact, of course, river temperatures. So warmer river temperatures can have an impact in the amount of nuclear capacity we see coming out of France. Warmer rivers mean that the cooling process that they use river water for in France can be less efficient, which means we see the reduced capacity. And equally, warmer rivers means that we see lower river levels, which means that any cargo ships that are transporting goods via rivers inland in Europe have to be lighter so they can carry less cargo, which means that the transport costs for things like fuel that are being transported via these waterways increase off the back of that.
So when you put all these energy drivers together, as a UK consumer, what are the things that they could be looking out for when it comes to purchasing their energy?
So prices have been trending up since the beginning of the conflict back in February, but within that, prices have been volatile, which means we have seen some down days as well. So as a result of that, there is still opportunity to be making hedging decisions within the current market. As you can see from the graph, we had a relatively healthy start to the winter 2025 delivery period, even though we had lower than average storage levels. And that's because we were expecting, as we've sort of discussed, that surplus of LNG to be available on the global market this year, providing an extra flexible supply of gas on top of the storage that we did have. And those positive conditions sort of continued really into the beginning of 2026, where we had milder winter weather conditions, which meant we had relatively muted heating demand. And as a result, we saw prices fall to relatively low levels. And then, as you can see in the middle of the chart there, towards the end of February, beginning of March, you see the huge spike in prices as a result of the start of the conflict between the US and Iran, with that first peak again being in March when we saw damage to the Qatari LNG export facility. From then, we saw prices fall relatively significantly again into when we saw the signing of the first ceasefire, And really, markets have been trending sort of slightly up, but generally sideways since then, as we've seen the negotiations continue. But that uncertainty remains in markets as to what the final outcome of talks is going to be. And then in the month just gone, in July, at the end of the chart there, you can see that we saw prices climb again on those front season contracts hitting a new high. And that's as a result of the renewed active conflict between the US and Iran, following the breakdown of that memorandum of understanding that was signed back in June.
Really useful insight, Emma, and it's, these catch-ups bring to life the opportunity that is still there for customers. Yes, volatility does bring risk, but it also creates opportunity, especially for those organizations that are open to flexible purchasing. For the customers that I'm speaking to that aren't open to a fully flexible contract, we do still have options such as our internally managed multi-purchase plus, as well as our standalone multi-purchase option, where customers can take advantage of those prices further out, buying in and out of sequence and securing an optimum rate for their business.
Yeah, so to put that into a monetary value, I had a look at the prices for the front season power contract throughout July, and prices moved as much as 11% from one day to the next. So that's essentially, if working on the assumption of about a half a gig consumption over the seasonal period, a cost avoidance of about £5,000 when hedging from one day compared to the previous.
And that brings to light the value you can achieve by having a solid buying strategy, but also being on a product that allows you to take advantage of, such volatile swings, but in your favor by buying in and out of sequence. So Emma, we've covered quite a lot, as we always do today. So the big question is, what comes next? So looking ahead to August, what is the one thing you'd recommend energy consumers to keep an eye on?
Yeah, again, I think maybe deja vu from last month, but it's going to be geopolitics and the situation between the US and Iran. So at time of filming, right now as we're having this conversation, the strikes between the US and Iran have been paused, but that doesn't mean they've returned to an agreed ceasefire. So there are mediators in Qatar and Pakistan at the moment that are trying to force that move back towards an agreement and a ceasefire, and move back towards that memorandum of understanding that allowed flows to resume through the Strait of Hormuz. So whether or not we see that materialize and that negotiation be successful, or whether we see the threats from Iran and the US sort of followed through on in terms of targeting power infrastructure and energy infrastructure across the Middle East, as seeing that escalation in the conflict, it's going to be the key thing to look out for over the next month is what direction that goes in.
So Emma, thank you for your time once more again today. It's proved invaluable, and it will do for myself and my team when we're speaking to our direct customer base. The key takeaway from me is that even though the markets are volatile, there is still opportunity to be secured, and to take advantage of that, it's just making sure you're working with the right energy supplier to put you on the right product to make sure that you're getting the optimal result for you and your business. So thank you once more, Emma, and I look forward to catching up with you next month.